Joining me now from Southern California, president of Wilsey Asset Management, Brent Wilsey. Brent, the gross domestic product reading. Everybody's waiting for this quarter two. It's not as robust as the previous quarter. It was on the right trajectory. It's 2.1%, right? Is that showing signs that the trade war between the U.S. and China is having a little bit of negative effect?
Well, it can have a little bit, and I'll tell you why, Graham. I do want to point out that's above the estimate of 1.8%, so better than we thought it would. At nowhere near a recession. But consumer spending, when I kind of broke this down, was up 4.3%. That's up from 1.1% in the first quarter. We still have wage growth at 3%. Now, why is this so important? It's important because part of the pull down on the GDP was an inventory drawdown. They're not building inventories. Well, if you got consumer spending going up and they're buying more products, well, when they go to the store, they want stuff on the shelves. So I think we're going to see that reverse in the third quarter. We'll have an inventory rebuild that's going to help the third quarter. Also, too, what's really hurting us is the strong dollar. Because our products are so expensive, that is hurting our exports.
Right.
And China has backed off a little bit on buying soybeans and vegetables from us and so forth. But that's not a big problem. I think the big problem is a strong dollar. And also, too, Graham, looking at the residential investment falls and the shortage that we have of labor and land with housing. But I want people to remember, it's not just buying a house. That's also renovations and buying, purchases for your home. And also, too, we do have, I keep talking about that's over $16 trillion of equity that people could start saying, you know what, I want to remodel my home. So Some bad things, but when you dig through them, I don't think they're too bad.
Not a good sign, and I'm not a bad news bears kind of guy, but it's not a good sign in terms of having business investment going down. But again, when you look at it individually, it sounds bad. You look at it in the big picture, maybe not so bad. Shipping is something that's interesting as well, Brent. When you look at UPS or Federal Express, these overseas shippers, especially to China, last year at this time, if you remember, there were a lot of folks doing a lot of shipping because they knew that the trade war was coming and they knew the tariffs were coming. And so when you compare it year over year, it looks bad that the shipping is down, but we have to factor in this trade war.
Oh, you're right, because there was a big buildup last year. So now you compare year over year, it doesn't look as good because there was a big buildup. But I think what we have now is this lull. And I think it is going to change. We actually do own a ship in our portfolio, and they have talked about not just that, but also in Europe, slowdown in Europe. So, things ebb and flow. And right now we're in the ebb. I guess the flow is better. So I think things will improve in the third quarter. But again, I'm not disappointed with this report at 2.1%. And this is the preliminary. Right. We still have 2 more revisions coming up.
Yeah, and I don't understand these bad news bears out there that are predicting a recession. And if you look at the fundamentals, and there are multiple fundamental indicators for a recession, we just don't have them. We may have had the inverted yield curve, where the interest rates, long-term, short-term, are not where they should be. But when you look at the entire picture, I just don't think that these people are on the same page that I am in terms of what economy they're looking at. Brent, thank you.
Want to see more videos like this? Click on the link below and subscribe to One America News on YouTube, and call your cable provider and kindly demand that One America News is added to your lineup. Call and subscribe today.